Why has gold price increased so much, or why is it increasing?
See, the gold price has increased so much because most of the central banks are buying gold. What they are saying is, we hold so much of money in dollars, we want to hold some of it in gold form. If most of the central banks are buying gold, then there is huge demand, so the gold price is increasing. But now the question is, why they are buying gold? See, since times immemorial or past wars, maybe physical wars or now the trade wars, gold has always been considered a safe haven. Whenever there is turbulence in maybe the equity market or world economy, investors always rush towards gold. So when the central banks are buying gold, the influence of dollar is decreasing. One more reason why the gold price is increasing is also the slowdown in the US economic activity, or you can call it the weakening of the US economy, which is leading to the dollar being down from the beginning of 2025. The last I had checked, it was down almost, the dollar index was down almost 10%. These are the reasons why the gold price is increasing.
Other than jewelry, in what other ways can a normal person buy gold?
See, if you buy jewelry, you'll have to pay making charges, which is huge. If you are a normal retail buyer, then the making charge can vary from 10% to even 30% from branded showrooms. 30% is quite huge. For example, if you are buying gold of 1 lakh rupees, almost 30,000 you are paying as making charges. Now there is something called ETF, exchange traded funds, gold ETFs. Exchange traded funds are something like, it has an underlying basket of stocks. For example, Nifty 50 ETF has almost 50 stocks in it. We call it Nifty Bs, BEES. Nifty 50 Bs has almost 50 stocks in it. There are ETFs from many other companies. Similarly, we have mid-cap ETF. Similarly, we have small-cap ETF. There is something called gold ETF also, silver ETF also. In case of gold ETF, the underlying asset is gold. Now, if you buy gold, it's traded on the stock market. You'll have to buy like any other stock. While buying, you'll have to pay all those charges, brokerages, STT, but when you sell the ETF at a profit, you are subject to two types of tax. One is called STCG, second is called LTCG. STCG is short-term capital gain tax, LTCG is long-term capital gain tax. Now in case of shares, the short-term capital gain tax is if you are selling it within 1 year. As of now, the STCG rate is 20% of the profit that you earn. In case of LTCG, which is if you are holding beyond 1 year, the tax is 12.5% of the profit after the exemption limit of 1.25 lakhs. This is the current rate. Means, for example, if your profit is 2 lakh rupees, 1.25 lakh is exempted, and the rest 75,000 will be charged at 12.5%, that is LTCG. Now in case of gold ETF, I think the STCG is as per your income tax slab rate. I don't think it is 20%, unlike other shares for STCG. But in case of LTCG, it is 12.5% without indexation. So it's your personal choice whether you want to buy physical gold or in the form of ETFs. Physical gold will have making charges. ETFs will have short-term capital gain and long-term capital gain tax. It's your choice. In case of physical gold, even if you are buying gold coins or biscuits, gold biscuits, that also will have making charge. If I recall correctly, before few years, the gold coins, I don't think they were charging so much of making charges, but as of today it is at par with the jewelry making charges. If you're buying gold coin, gold biscuits, it will be at par with the making charges of the jewelry, because in case of silver, I have heard that silver biscuits will have making charges as high as the making charges of the jewelry. So it is an individual decision whether you want to buy in the form of jewelry or in the form of ETF. Now this video is purely for educational purpose. It's not a buy or sell recommendation. You can take advice from your investment advisor for your investment decisions. Thank you.